Welcome to Frontier Conversations, a podcast by Foresight. We explore what lies beyond capital, diving into the ideas, people and opportunities shaping the future of investment.
Hello, welcome to Frontier Conversations. I'm Richard Kelly and I'm joined here by Robert Guest, and today we're going to be talking about all things natural capital. So with this, we've taken a leaf from The Rest is Politics, so there's going to be some lively debate, to disagree agreeably, unpacking the why behind the headlines. But for us, I think this is personal.
Yeah, I agree, Richard. It's definitely been something, navigating through our careers in renewable energy and things that we're excited about. I grew up in Edinburgh in Scotland, which is obviously an urban environment, but actually it's very easy to get out and about into the countryside. And a lot of my holidays were spent on the west coast of Scotland in the Highlands, and so I have a real connection to the outdoors and nature as well, which is sort of started at quite a young age. So to be able to move back to Edinburgh and be working in natural capital, reconnecting with something that I'm very passionate about, and to be able to do that as my day job whilst investing is really exciting. And I know, Richard, there's other things we have in common around kind of the sustainable transition and things that you're passionate about too. So it's good fun.
Yeah, no, absolutely. I mean, for me, often I think about my children and what kind of world they're going to grow up into, and it's thinking about did we do enough, and that's really what's kind of driven me to be involved in natural capital and investing in that sphere. It's also I've always had a draw to the outside. When I was a student, I was a gardener, and I used to run a sort of Christmas tree delivery business and side hustle whilst at university. So I've had this sort of affinity to trees and interest in them from the get-go. So it's great to be able to be back in that space again. I remember probably 7 years ago now, when we put our heads together to think about what's next for Foresight Group, what are the next opportunities where we could make a difference, and Foresight's sort of renowned for pioneering investment into renewables and utility scale renewables. And I remember that discussion we had about that's a great first step, but that realization that actually if we're to get to a nature positive net zero, we need profitable solutions that sequester carbon from the atmosphere and restore biodiversity alongside decarbonising energy systems. I remember that kind of epiphany moment, and that's how we got into it. Starting to look at how can we offer investors competitive returns whilst also delivering that very deep impact to climate and the fights against biodiversity. Yeah,
and it's sort of nature-based solution. It's a really cheap way of sequestering carbon, and the energy transition is vitally important, and effectively that's reducing carbon emissions and then replacing our energy needs with renewable sources, which is something we must do, and electrification is really important. But I think, as you were saying, when we sat down and were starting to think about, well, where are the other sustainability challenges? All the science and the IPCC reports are telling us we need to be doing the energy transition, but also finding removals technology to really turbocharge that. And I think it was a real moment when we realised that using trees and peatlands and other nature-based solutions, you can reduce and remove carbon from the atmosphere in a really cost-effective pounds per tonne. The return on investment in terms of climate change, that was a real moment for us, and being able to kind of combine that cheap carbon removal and the biodiversity uplift you can generate. And it's been quite exciting, sort of structuring a product that does that, but also delivers a return, which is clearly what investors need as well.
And it's essential that it does deliver a competitive return versus anything else that investors could put their capital towards. Because when we looked at it, even if you were to deploy all philanthropic capital in the world just towards the climate crisis, it wouldn't get you would get you less than 10% of the way there in terms of the investment that's required. So if you can't use philanthropic capital to solve the challenge, it's got to be competitive capital that investors are attracted to on its own merit. Okay, well, why don't we kick off then with some headlines? Two recent pieces of news just to discuss. Recently, it's now looking like the EU anti-deforestation legislation that was planned to come into force. It's now going to be delayed by another year, which is obviously disappointing.
Explain to me, when you say the EU deforestation regulation, what exactly is that? What are they saying in that? What does that mean in terms of impact?
So it means that once the legislation is effective, that those commodities that are imported into Europe and are consumed in Europe, suppliers will have to prove with geolocation data where those commodities came from, and then also provide additional due diligence materials and evidence that they've come from areas that haven't resulted in deforestation.
So traceability,
full traceability,
okay.
Chain of custody. It's a huge exercise from a data perspective, and nothing has been done like that before at that scale. We've seen for timber, you can have certified timber, FSC or PEFC certified timber that does have, it's kind of ahead of the curve in that respect versus other commodities. And the geospatial data has been used as part of that due diligence exercise and chain of custody exercise. So there are probably lessons to be learned from timber, but it's a huge exercise.
And so is the theory then that if we don't have this regulation, because I think there's some stats, aren't there, about sort of the supply of sustainable timber globally is pretty low, and that at the moment global quite a bit of it's coming from flattening, semi-natural and sometimes fully natural forests, which is fairly criminal. And is the kind of drive to try and basically stop unsustainable timber from leaking around the edges into Europe? Because I think things like Russian birch ply are still coming into the UK via other countries and things, aren't they? So is this designed to sort of stamp that out so that in Europe every ton
has come from a sustainable source, and by sustainable it means that it hasn't resulted in deforestation.
Yeah.
So it's hugely ambitious, and it should hopefully stop that kind of countries moving timber and other commodities from country to country, and then the original source of the product and whether it came from as a result of deforestation gets kind of lost in the weeds. It should hopefully stamp that out.
Lots of paperwork,
but it's a lot of paperwork.
In new systems. It's hardly a surprise it's taking a bit longer but at least they're pushing for it.
Direction of travel, I think.
It's not being binned.
Yeah, it's not been binned.
Okay.
I think it's a genuine. This is quite complex. In terms of IT systems, it's a pause, not a pivot. Other piece of news around wood and carbon credits and the ETS. What's been going on there? Yeah,
I think that really exciting, good news story coming out from the UK emissions trading scheme, that the authority, the body that administer the ETS, which is for utilities generating power and effectively putting a cap on how much of that power can come from fossil fuel generation. So incentivizing people to go on a transition decarbonisation pathway. So if you generate with green power, that goes in the good bucket. If you're using too much fossil fuel power, there is a tax for those, and there's a pathway for decarbonisation for utility companies. And that trading scheme has been running for a long time. The UK and the EU have separate emissions trading scheme, which I believe are going to re-merge together again. But there have been campaigns for carbon removals, and carbon removals can come from afforestation, which is what we're doing a lot of in our strategies, planting new trees that permanently suck up and sequester and lock away carbon. over time. So there's been campaigns for some time for removals to be included in the UK/EU emissions trading scheme.
So what that means in layman terms is when we plant a forest and a forestation scheme, we're receiving a credit, one credit for every tonne of carbon that forest will go on to sequester from the atmosphere. And the news was that credit, once the carbon has been sequestered, can be sold into the cap and trade UK ETS system.
And that, for us, that's the voluntary carbon credit market's the alternative option. And there's good deals going on there, but it's over the counter, and the market is really just getting started. So there's buyers, corporate buyers with net zero targets, but it's not a liquid market. You can't just sell easily and quickly, and the price discovery and the kind of forward curve is emerging, but it's taking some time for that voluntary market. So for us, I think the excitement is that access to an emissions trading scheme, there's a forward curve, there's liquidity, that provides a sort of a backstop pricing that you can clear your asset and sell into that market, and that's game changing for voluntary carbon
and higher prices. And we ran a research piece with King's College London looking into this whole area to try and understand what would be the impact if the Woodland Carbon Code were to be integrated. And it was our kind of co-findings that integration would materially increase the price of these woodland carbon credit prices that they're trading at, and that would then unlock several 100,000 hectares of land that would newly become economically viable for afforestation.
And the national planting targets over the next 30 years is about 1 million hectares?
Yep.
So what you thought, 20% more if we had a liquid route to market for carbon? That's a real boost, isn't it, for making land more viable? Yeah,
we thought about 200,000 hectares would be newly unlocked purely by this integration point.
Yeah.
Really, really exciting potential. It's a forward-looking statement, I think, is what we've seen in the news. But we're just now hoping that policymakers follow through, and it's timing of when that happens.
2027 was I think sort of mooted, and that we're pushing for it to go faster than that. But I think really positive to see the kind of forward thinking to think, well, if we can allow carbon removals to access into this market that already works. So that's what I liked about it. That market is already functioning. It's already decarbonising. Let's not reinvent the wheel. Let's use the existing carbon trading mechanism that we have. But there's been some great stuff going on in biodiversity, net gain.
Yeah, I mean that new legislation is game changing. Is really the envy of the world. So just to recap, in England now, if you're a property developer, you have to deliver 10% biodiversity net gain. And the priority is, if you can, to deliver that net gain on the site. But if you can't, the legislation says that you have to purchase credits from a landowner who has delivered that net gain somewhere else, and somewhere relatively close to where the property development is happening. And that's now, that's mandated in law. It's created a compliance market. There's now a whole industry of biodiversity net gain developers that are establishing. So really exciting.
So that's not voluntary anymore, then?
No, it's mandatory. So if you're a development over a certain scale, you'll be automatically caught in this in this legislation. Okay, so let's just rewind. This is a podcast about natural capital. What is natural capital?
It's quite a big topic, but I think the thinking that's coming out around it is everything that we have and do in some way relies on nature. The planet is the natural world that we live in. And I've been reading a book which I'd really recommend to people, which is Partha Dasgupta's distilled what was a very long, 600-page document into 170-page book, which I've just started reading and very much enjoying. And he articulates it quite well, which is previously we had enough nature, enough natural capital to keep us going. And so when we ran out, we knocked a forest down or we mined a certain area, we would always have space to migrate into. And I think what he's saying is scientifically we are hitting with the number of people on the planet, planetary boundaries in the ocean, on land, the atmosphere with climate change. We're hitting the buffers.
Yeah.
We can't keep doing that because there's no spaces left, and the bits of nature that we do have that are natural and have biodiversity and are actually vital for human life to keep going. We can't just keep moving into them, so they're now conservation areas. So we basically have to change what we're doing and start thinking about investing in it, recovering it, and protecting and enhancing it and building back a bit, because we've gone too far. And with population growth going the way it is, we kind of need to start reversing the truck up very quickly. And if you look at global GDP, and look, it's very hard to measure these things, but
so it's half of global
GDP, which is about $58 trillion, is either highly or moderately dependent on nature. So if nature goes into decline, then we're in serious trouble. And so I think there's a kind of recognition now in science and percolating into the civil services and governments that we need to start investing in what effectively props up our entire economy. So that's the kind of macro level kind of thought process is we've hit the boundaries, let's invest in it again. Yeah. And, we talk about this a lot, Richard, don't we? But that's the kind of how I look at it from the top down, is that we need to sort of sort it out. But there's much more to it than that. Yeah. It's like, how do we actually get the capital? What's the pathway for that? It used to be philanthropy, investment, and a lot of conservation. And I think conservation, just conserving stuff, we kind of need to invest. But how do we do that is the thing we've been trying to work out for the last few years.
Yeah. And I think natural capital, I think a lot of people assume that just means rewilding schemes. And I think, our realization is actually natural capital is so much bigger than that. Natural capital is nature. And what is nature? I mean, it's the oceans, it's the land, and it's the air, and it's anything that interfaces with that. So it's, every farm, every forest, every piece of land is natural capital. I think it's taking a holistic perspective of, here's a parcel of land, and yes, you could just optimize that purely through a sort of a mono focus of let's just grow fast growing trees, or let's just produce one type of food or grow a particular crop. But holistic natural capital management balances those typical traditional kind of provisioning services, timber and food production, with other ecosystem services like carbon sequestration, like biodiversity. And what's really exciting about natural capital as a theme is that now increasingly it's possible to actually monetize those other ecosystem services, things like carbon sequestration, biodiversity net gain, alongside and in addition to the provisioning services, producing timber, producing food. And that's something that's really changed over the last decade, I think, is it's now increasingly possible to monetize those other services that the land and natural capital is producing historically for free. And so what's happening? What are investors saying about natural capital in terms of allocations to it? How much have investors been putting towards natural capital historically, and where's it going? What's the direction of travel?
Well, I think forestry and agriculture have been asset classes as an alternative for a while. We've been doing it for a few millennia, but it's not really been mainstream. And from as you know, from when we're fundraising, the returns for kind of brownfield, and when I say that, I mean a sort of operational forest that's already been planted a while ago, a portfolio of agricultural assets. They're yielding assets. They've got a kind of rolling harvest, restock, go again. And what we hear is, good investments, but super long term, because they're sort of commodities, selling commodities. The land is a commodity, and the food and the timber are commodities, but they're quite cyclical, and they sort of tend to be single digit returns. And what we hear is, they're great inflation busters. They're great diversifiers. They're not very geared. They don't have a lot of debt in them. So they're not that sensitive to interest rates, or less sensitive to interest rates than other investments. So they're a great alternative. But I think the rub of that is that one, they're a bit passive, and you're normally in a sort of single digit return, mid-single digit return type territory, which isn't that exciting. And I think the other feedback we get is, what about the impact? It's natural capital, but are you doing it better? And how do I get into the double digits, particularly with high interest rates at the moment? So that's what we're hearing is, yes, forestry and agricultural are great, but are they environmentally impactful in a positive way? And how do I get my returns, into the high single digits, into the double digits, into the teens, so that it doesn't have to be a sort of 30-year locked in, ride out the commodity cycle type affair.
So can you invest in natural capital and get those higher returns, get into the double digits?
Yes, I think is the short answer, but it does involve being a bit more than passive. You've got to develop stuff. You've got to actually get out there, and as a investment manager, I think you've got to get out there and think, I can't just buy a turnkey portfolio for $50 million and expect it to give me 15% for a land asset. So what as you know we've been working on is trying to do a bit more. So keeping all the good stuff, the inflation beating, the diversification, owning the land, doing the provisioning services, but doing it really well and doing it sustainably. But to get into those sort of high single digits and double digits, we've got to develop, which means we're doing sort of land use change or aggregation plays, buy and build plays, and things like that. And I know Richard, you've been quite busy working out how to get hold of the land that might come out of one use into another, and we planted quite a lot of trees, but maybe you can tell me how we do get into that double digit territory. If we're buying, say, a livestock farm, what are we doing with it, and how do we get into something that is more interesting for investors and more impactful for the environment?
Well, I think the first thing is around identifying parcels of land that has potential, and so the sort of development we're talking about is establishing a new forest, and it's been our experience that there's an arbitrage available across multiple geographies in Europe, an arbitrage where you've got pasture and sheep grazing land that is becoming increasingly sub-economic, with grants being tapered away for traditional farming. And there's an arbitrage by successfully converting that into a commercial, sensitively designed forest. You can significantly increase.
What kind of trees do you put in that design then? So
when
you say sensitive design, you're taking a livestock farm. What classifies as a sensitively designed multi-purpose new forest?
I think it's taking in all sorts of different considerations. Species diversity, start with species diversity. So it's mixes of typically conifers are the trees that would be commercial and ultimately harvested, but it's not planting a single species of those of tree, sort of a monoculture. It's planting a diversified mix of different species, is part of it. It's also being sensitive to things like landscape considerations. So in local communities, it's ensuring that visually the new forest looks attractive. So that can mean planting broadleaves around the edges. And again, with the broadleaves, it's about planting a diverse mix of different tree species. And what we've been doing is trying to focus on critically rare and endangered tree species. And I know we've doubled the population of some critically endangered tree species like black poplar, juniper, holm oak. So it's sensitive in considering communities, considering physical landscape, and also biodiversity considerations.
And what's better at locking up carbon? Is it the broadleaves or is it the conifers?
Yeah, that's a really interesting question. Per hectare, in the long run, broadleaves will sequester more carbon per hectare, because those trees are never harvested. They continue growing and they sequester. So they might sequester 400 tons of carbon per hectare.
Over how long?
Maybe over 100 years.
Okay.
From planting.
You're measuring over 100. Okay.
But conifers, they may sequester, some fast-growing conifers may sequester a couple of 100 tons, so less than half in terms of the total carbon sequestration. But what's really interesting is how quickly the carbon is sequestered. These conifers are growing at 2 to 3 times the speed of broadleaves, and so that sequestration is all happening in the first 20 to 30 years. And so in terms of climate change and net zero 2050, actually fast-growing conifers are really helpful because they sequester carbon in a time frame that is helpful.
And the other question we get a lot is if the trees conifers are being harvested at year 40, how does that deserve a carbon credit? I mean, we are very comfortable with it, aren't we? But it's a bit of a head scratcher when you first think about it. Well, if you're cutting it down, how on earth does anyone give you a credit?
Yeah.
Can you explain that? Because I think it is important for people to understand.
So the principle of getting a carbon credit is that there's been an additional ton of carbon sequestered from the atmosphere. And when we plant these conifers, we're harvesting them every 30 years. The methodology assesses carbon sequestration over 100 years. So when you plant a new forest that's harvested maybe 3 times in 100 years, on average, there is carbon that's been sequestered in the forest. It peaks just before you harvest it, and then it goes back to effectively zero. But then there's a legal obligation to restock and replant and go again. And so then there's more sequestration. So it's the average sequestration over 100 years.
Okay, so you don't get credit for peak.
No, it's the average.
It's quite conservative then.
Yeah, and there's also then buffers built in, such that if the forest were to burn down, for example, you're only getting about 80% of the credit actually admitted in carbon credits. There's a kind of an insurance pool that covers kind of wildfire.
So you get the average carbon lockup over 2 or 3 rotations, and there's some risk buffers built in just in case the trees don't grow fast enough, or they burn, or there's a wind blow storm event or something. Okay, so it's quite conservative.
It's even more conservative than that, because the model it just assesses the carbon that is locked up physically within the property, the above ground carbon. It effectively assumes that when the timber is harvested, that carbon is immediately released back into the atmosphere. But the reality of that is that timber goes off into a series of different applications, things like construction, as an example, where the carbon remains locked up in the timber for many, many decades. But there's no actual credit.
So you don't get credit for the fact that some of the logs are going into a house for 100 years or something?
Exactly. There's no credit given in the carbon credits for...
So it sort of assumes, in essence, that every ton of timber is burnt immediately.
Very conservative.
You only get some credit for the kind of the carbon that's locked up on the site.
Correct.
Okay. Correct. Okay. Well, that's good to know, isn't it? So that they've thought it through, the carbon credit methodologies, and it is, there are verification and methodologies and third-party checks, aren't there, around this? But I think it's important. But just bringing it back again, Rich, so you plant a new timber forest with broadleaves and conifers in it, sensitively designed. got some carbon credits for that. How do you make the money? What's the engine? How much of the returns coming from the timber, and how much is coming from land? And what's the return stat look like? And when are you selling?
So typically, our strategy is that we're looking to exit these young planted forests about 7 to 8 years after we originally acquired the farm. And the plan is that most of the value is in the value of the freehold property, and the trees and the trees that are growing on it. So typically about 80% of the return will come from the sale of the land, and then it's sort of 15 to 20% of the value is coming from the carbon credits as the sort of cherry on top. But yeah, the majority of the return is actually coming from the real asset, land, and the trees that are planted on it.
Yeah. Okay. That's interesting. So you can get a good development return then from establishing these new forests, and the carbon's what the kicker.
Exactly. So broadly speaking, you'd be looking to double your money over that period of time, including the carbon. And then our strategy is to recycle that capital into the next wave of afforestation. And we have a permanent pot of capital that its purpose is just to perpetually plant new forests and capture that development return infinitum.
Okay, so that's how you get it into the zone, into the sort of upwards of 10%.
It's because we're investing over that shorter period of time. We capture the development, that arbitrage opportunity, crystallise the return with the exit, and then we recycle.
And in terms of allocations, we are seeing pension funds in particular, and in the UK we've got the pooling system where pension funds are being, through regulatory and government drives, to put the pension funds into bigger pots. So you've got the pools and the local governments sitting beneath that. But we are seeing a really exciting wave of LGPSs and the pools that sit above them, basically acknowledging what Dasgupta and science is saying, is that we've hit planetary boundaries. We have to do something about it. It's a great investment. But we're seeing sort of anything between 1% and 5% of their overall allocation. This is trillions of pounds of capital, and in Europe, similar kind of commitments. People are realizing that we need to basically prop up global GDP and act responsibly, and that the pension funds have the longer term mindset. They've got that kind of responsibility. I think that the members of the pension funds respond well, and the trustees respond well to that kind of, we're the right party. We can invest for the long term. And the other ones are family offices, isn't it? Where we've got these high net worth or ultra high net worth family offices who bring in their friends and family and their other high net worths that they associate with. And there is a lot of money, which is very sophisticated now, targeting, caring about, the next generation. A lot of philanthropic investment, a lot of sustainable investment is coming from the next generation. Father and mother might have made a lot of money doing something quite industrial, and these kids coming up through the next generation quite passionate about the environment, and we certainly speak to them, and there's that legacy thing. They want to leave they want their money. They're very sophisticated investors, they're very well advised, but they also want some environmental impact, and they want their money to do good. And there's a lot of money there that could be put to work with that long-term view, isn't there?
I think it's interesting. Certainly, the family offices that we've spoken to, it's that next generation. It's the generation who are probably in their 20s and 30s now, who are starting to become influential. They're on the investment committee, and they've got a voice at the table of how the family's capital is allocated, and it's that generation that really cares and is helping to drive the change as a theme. But it's a staggering, that 1% to 5% allocation that many LGPSs are making. I mean, that's a staggering shift in allocations by historical standards. from a place where we're talking about less than maybe 0.1% of capital is currently allocated. So I think we're going to be seeing quite significant shifts in the way capital is allocated into natural capital, over the next 5 to 10 years. So it's very exciting space from that perspective.
But there's sort of what you say you want to do, and then you're sort of, this is our intention, and then getting from A to B. A is, it's great to see people saying we'd like to be in natural capital. It's going to be a significant part of the portfolio, but there's quite a lot of education, isn't there, to get people from that sort of statement of yes, I'd like to do this, to understanding it and then deciding which part of what is quite a diaspora of options.
Where do you start?
And which manager, which funds, where am I on the risk profile, what's the carbon credit, how are you measuring nature and turning that into a token? I mean, it's quite daunting, isn't it? For
there's a lot of education. I think moving the conversation on to community. I mean, we sort of touched on this briefly when we were talking about what we mean by a sensitively designed natural capital development project and how it might consider community. But maybe we should sort of bring it to life, Rob, with a sort of a real world example of that engagement with communities.
Yeah, I mean, I think about it in two ways. One is there's an actual put your serious business hat on and think, well, operationally, we're changing stuff in rural environments, and there is a kind of devolved way, and it's quite streamlined to get, permission and grants to plant a new forest, which is it's not that easy to navigate, but it's not a kind of 5-year planning permission process to get a wind farm, but it does take 1 or 2 years to get through that permission and grant funding process. And there's the rules, black and white, written down, and the statutory consultees and the box ticking. And there's what you can write down, and then there's what happens in practice. And the difference between what the rules say around ecology, community stakeholder engagement, myriad of other things, bird surveys, everything you do, and you can do everything right, but actually, when you get to asking Scottish Forestry or Natural Resources Wales or Forestry Commission in England for the permission, if the community aren't with you, you've got a major problem. So there's actually a business risk if you don't engage with the communities and bring them on the journey, because it's changing. You notionally you own the land, but if you change people's views and their environment and the space they work and live around, they're going to have opinions. And the law says statutory consultee is the local councillor, and sometimes they don't reply to the emails. They're useless, or they're just very busy, more likely, and under-resourced. Yeah. And you don't have to do a town hall meeting, but as you know, and this is now our policy in the UK for afforestation, is that we hold a town hall meeting, and we get, we advertise it on Facebook, in the local post office, put posters up, and there'll be a couple of sessions, or at least one session, where we sit down with the maps and we talk people through what's happening.
Yeah.
And out of that, we get the feedback. People feel like they've been spoken to. Everyone gets a chance to air what they're feeling, and understanding, a bit of education. And 97.5% of the time, most community members walk out of that meeting, and a lot of them have gone in quite sceptical, going, well, at least they asked. Yeah. And they didn't have to. And actually, that doesn't sound too bad, because I've understood that we've got a timber supply issue in the UK, and we can't import all this unsustainable timber. So
can you bring it to life? What sorts of objections or issues have we, or concerns have community members raised, and how have we solved those?
Well, the kind of change from farming to forestry is a big one. 1 million hectares of land's the national planting target out to 2050, give or take. And that of livestock and farming land, it's not actually that big a percentage, but there's a concentration challenge. So people are saying, well, there's quite a lot of forestry in this area.
Right.
So I think there's a kind of farming being reduced and forestry sort of increasing. And so people kind of want to understand, well, what about the people working, the sheep farmers? What are they going to do next? And so one of the things that we've done was to set up a skills program to kind of recognize the impact of what we're doing. We're changing. There is a job opportunity there. It just happens to be in forestry, not livestock farming. But a lot of those livestock farmers are the children, young people, middle-aged people, all ages, have got great skills. They can mend a barbed wire fence. They can drive an all-terrain vehicle. They understand the countryside. They're the perfect employees to work in forestry, but there's not much pathway. So, one of our regimes, which I know you were very involved in sort of pushing forwards, was the skills training program. So we're training, fully funded training programs for people to get all the tickets to use a chainsaw and the knapsack sprayers and the things that they need to do forestry. And so creating that career pathway has been something that we've started to train X number of candidates every year in Wales, in the areas that we're operating. And a lot of them are ending up working on our sites. And, we've created, over 1,000 job opportunities through our treatment. We're planting, we say this the whole time, but, when you say it out loud, we're planting 12 million trees across about 6,000 hectares. And so there's a serious amount of road building, fence building, getting the trees
tree
planted,
is planted by hand
planted. And so, but the people working in the farming industry need the pathway to get into that and get into working for the sorts of contractors that we work with and the forest management business, and that can lead into a pathway into wood processing. So that's one of the initiatives that I think, I know we're both very proud of it, which are there's probably some other things that we could talk about, isn't there, about sort of...
there's been all sorts of... they're so bespoke, these ideas, and brilliant, that the community come up with that, without speaking, we just wouldn't be able to come up with ourselves. So, for example, one of the properties in Wales, there's some mountain biking trails in a neighbouring forest that is directly adjacent to the afforestation scheme that we've planted. And the community suggestion there was that we'd love these mountain biking trails to continue through your property, and actually, can you put a car park in that's free to encourage ecotourism and people to come and visit, and see it as a destination.
We're not shutting the gates then.
Open gate policy. There's been rewilding schemes that we've done. We entered into a long-term lease for a peppercorn with a community group who are doing a really ambitious rewilding scheme. We've done land swaps where members of the community actually wanted to retain a particular area that not to be planted with trees, and we were able to swap that land with another area that another local landowner brought forward.
That was one of my more interesting Monday nights, driving up to Aberdeenshire. Sit with a group of people who the starting point was they'd got themselves into a bit of a funk about not wanting the change, and we sat there for 2 hours, and each person had gone online and Googled reasons why this wasn't the right place for the forest, and we listened to all of that, and then we talked about timber and forestry. And we kind of flushed out. It turned out what the issue was there were 3 farmers who were right in the heart of the farm that we'd purchased for this planting, and there were just a couple of fields that kind of connected the farms, and they could see each other's lights on at night. And I remember saying to one woman, I said, "We're still going to plant a forest. This is actually a good place to grow timber in the UK, but I hear you about the fields. Like, we're willing to talk about that because, we're not kind of into kind of pushing these things through." So the maps got out, and it was like a storm cloud lifted out of the room, because actually what we'd found was they weren't that anti-forestry because they're farmers and they like they liked the fact that the land would be a productive provisioning service. Okay, fine, it's providing food right now, and we got to it. They actually were quite proud to see it would be growing great logs and providing timber. And the issue was there were a couple of fields that were some of the best fields for farming, but also kind of were connecting them as a community.
Yeah.
And the storm cloud lifted out of the room. The maps came out. We said, we'll go away and have a think about it. And the next day, the phone rang, and someone in the NFU, quite senior in the NFU, who was part of the local community, said, I've got some fields up the hill, perfect for growing trees on, free draining, wading birds, not there. It's a great place for forestry. Let's do a swap.
Yeah.
And we've done that swap now. And really what it boils down to is if you get in the room with them and talk to them, an idea will come out. And normally there's actually a kind of solution that's actually good and fine for everybody. Whereas if you stick to the rule book and then sit there kind of saying to the authorities, push it through, it doesn't end up with good results, and you end up with sort of slightly pointless and needless kind of friction, when normally if you get in the room with them and talk to them, there's a positive outcome to that.
Yeah, no, it's a brilliant example, and not something that we would have ever come up with on our own without talking to the community.
And it's quite nice to be able to connect with people. And we were up at Fordy Estate recently, weren't we? And I know you sort of been there a few times, and it was great to get you down there to sort of see. 5 years ago we bought this Highland estate, and it's quite a lot changed there now.
Yeah, I mean, it was brilliant to talk to the team who are involved there, and for them to express how their experience had been working with us over the years, and how proud they are actually of what they've been involved in. It was brilliant to see. And that's a brilliant reminder of a shameless plug for a video that's about Fordy Estate, which is the property we just mentioned. It's the largest property in the portfolio, and we've got a video which really showcases what it is that we've done there, and we interview various members of the community who talk about it. Yeah, so I think to bring things to a close, I mean, if we've sort of covered how we got into natural capital, we've talked about what natural capital is. We've covered how investors, institutional investors and family office investors in particular, are talking about making significant allocations to natural capital in the coming years. And we've talked about the community and some specific community initiatives, and how natural capital is not just about biodiversity and carbon, it's also about people too. I think we'll wrap things up there.
Brilliant. Thanks, Rich.
No,
with that.
Thanks, Rob.